Investors and traders, welcome to the channel Market Chat Pattern. Today is 11th of February 2024. I hope everyone is having a great weekend. In this video segment, we are going to take a look at the US technology stocks and ETFs. We'll take a look at the ETFs such as the XLK for technology, QQQ, and the major stocks such as Tesla, Apple, Microsoft, NVIDIA, Netflix, Meta, Amazon, Shopify, Roblox, Symbiotic, and maybe even a zscaler. So I'll try to cover quite a few things, and apologies, this video might be longer than our average videos because we have a lot to cover, but it's also the weekend review, so we have a little bit more time as well. And we will be mainly looking at the longer term weekly charts, and we will also look at a daily chart in some cases. With that, as always, this video is for educational purposes only, and it is not a financial advice. And with that, we are taking a look at the weekly chart of the Spider Select Sector Fund for Technology. And here, if you look at the number of one-to-one price projections, the ABCDs that are completing around 216, we can even roughly say 220 dollars per share level. This is what we have been watching for quite a while. This is what I mentioned in our previous video done last weekend, and the last week was pretty strong, closing on a strong basis for the end of the week, making a new all-time highs for the ETF and also for the NQs as well. That's the futures chart, which I will cover in another video. So here we are looking at a little bit more upside to go for this. So I believe 216, maybe even 220 is achievable because we have these bigger ABCDs completing a little bit higher. For example, this black one, this is the one-to-one price projection ABCD, that's completing around 120, and 228 is the smaller one, the purple one, and of course we have the red one, which is the smallest one, completing around 216, and we have the 1.618 Fibonacci expansion of this BC swing of the black colored ABCD pattern around 216. So 216 and 220 is what we are watching for. With that, we'll take a look at the weekly chart of QQQ. So this is the weekly chart of Invesco QQQ Trust, and here again I've not drawn all the ABCDs for this one. Before 151 is the 1.272 expansion of this swing. Let me actually try to highlight this swing for you. Here we go. So and then we also have this blue ABCD completing nearby, so 450 is what we are looking for. With that, let's take a look at Tesla. So here we go, weekly chart of Tesla. This is one stock which we have been following for a long time on this channel, and here this stock has been under a fair amount of pressure starting in the month of July 2023. So it's been a little over 6 months that this stock has declined and has rallied, declined and rallied. But every time we have been watching for the pattern formations, and here for this one, we had this a 3 drive to a bottom pattern completing, highlighted in the purple shaded area around this 175, which is the 61.8% Fibonacci retracement. And we also had this yellow ABCD pattern projection completing a little bit lower. So what we were seeing on the weekly chart, 175 to 155 is the kind of area we should be really watching for. And what we are seeing is we have seen a good weekly close where the price rejected lower prices from $175 per share level. Let's actually take a look at the weekly low. The low was 175.01. So that's pretty good. And of course, we also mentioned it's a flag formation right here. And if we just look at it from a channel perspective, was also the bottom of the channel alongside the 1.70 Fibonacci expansion of this little swing, this low to this high, and also of course the 61.8% Fibonacci retracement coming. So we had a confluence of a few things coming together, and whenever there is a confluence, of two or more pattern formations or Fibonacci ratios coming together is something we pay close attention to. So with that, this is good to see. This is encouraging price action. Otherwise, the price action in the Tesla stock was getting a little worrisome, to be very honest. And here it's just an encouraging sign. So for the next week, we have to wait and see uh, how the price is going to react or trade. And here what we have seen is we'll just try to use the concept of symmetry. And here we go. So the last couple of times the rallies had been about this much. So here this rally could actually take this stock, the rally it needs to confirm following weeks, a weekly chart could take us as high as about 236, 35, $240 per share level for this stock. That's gonna be the bottom, the top of this channel as well. And if the stock is actually able to break out of this channel, then what it was just bull channel or bull flag formation. And whenever the price actually moves out of these channels, it's pretty dramatic, and we could in fact see a fair amount of acceleration take place on to the upside if the price is in fact able to break out of this channel formation to the upside. So this is what we are watching for this stock. In terms of our targets, we have this 78.6% Fibonacci retracement coming around $350 per share level. Now the what we were watching for was this point here. This used to be our point C, and the upper ABCD that we were looking for was going to take us somewhere in the $350 per share level. Now with this we things have shifted a little bit. So assuming if this turns out to be a good low, then here we go. And if we were to just take a one-to-one price projection, which we like to call ABCD, here we go, that will also take us roughly into the 350 to 360 or even 70 region. That's assuming that we are able to find a low around $175 per share level. Now that's an assumption, it's not a confirmed low as yet, but if we were to make a projection, this would be a suitable way to do that. And if the 61.8% Fibonacci retracement breaks to the downside, then we are looking at 155, and then possibly this breakout region of about 105 level. But as I mentioned before, the price action had been actually fairly encouraging last week, where the market closed on its high, rejecting lower prices from the key level of support, and that's a good sign. And we are waiting for further price confirmation per the price action for next week. But for now, the pattern bottom that we're looking for at a key level has held, and that's good for the Tesla bulls, something to look at. Now with that, let's take a look at now Apple. So this is the weekly chart of the, oh excuse me, this is not Apple, this is Alcoa. Here we go. So weekly chart of Apple, and what we see is Apple just having a sideways price action. And in fact on the daily chart we were looking for a little bit lower price to come in around $76 per share level. Price never really quite reached that, but it came pretty close, and it's just sideways. The thing to really watch in this stock is this $200 per share level, which we had identified way in advance, because this was this completion of ABCD, of an extended ABCD. Right here, the red line that you see, and also we had the 1.272 expansion of this range here coming at this level. So a confluence of two things is always something we pay close attention to, and of course the stock also did a double top here. So it's just in a really range bound price action. The possibility remains that the stock could actually come down and test the bottom of this range around $165 per share level, maybe even move a little bit lower and test this region around 160, 155. That also remains on the cards. As long as the market is not able to take the stop out of 200, then the 1.618 expansion comes around 218, or roughly we can say even $220 per share level. Now, one thing about the Apple stock that I would like to mention is, looking at this weekly longer term chart, this $120 per share level, this is like, 126, if you look at even the bottom, $122 per share level. It's a really strong level. You look at the number of ratios coming together within that region, and we also have this ABCD bottoming pretty much very close to where the actually stock bottomed. So that's pretty strong. So the stock actually remains pretty strong, and also from a momentum perspective is also strong. But the stocks do have pullbacks, and look, it was a fairly wide range, but it was just the stock was just range bound during all this bear market that happened in 2022. And then finally it made a bottom in the month of January 2023. But before that, you can see in the month of June of 2022, it had a really massive rally. And look at if you look at the degree angle of this rally, it was pretty steep. I believe it was a little over 45 degrees in angle. So this is something to watch. This is the really key level. If ever the stock breaks this level, yeah, then we can think about, okay, maybe something really longer term is happening in Apple. Till that time, this stock is really pretty strong. Now let's take a look at the weekly chart of Microsoft. So it was in the news that the Microsoft is now the world's largest company after overtaking Apple, and the artificial intelligence side of things and their investment in OpenAI seems to have really paid off for the shareholders, for the stock. Now it just broke out of this $400 mark, and the 433 is our next shorter term target. And then yeah, it's also possibility exists that the stock in fact might also be doing a one-to-one price projection. So I'm just gonna make this a little bit smaller. Okay, here we go, so that things are a little bit more clear on the chart. And we project it right from here. So about 460, 450, 433 shorter term, and we have the possibility of the ABCD completion right from this double bottom, which we also mentioned about when we were covering this stock. You can watch the previous videos. This is what we are looking at in the Microsoft stock. Now with that, let's take a look at NVIDIA. Here we go. This is the, oh my goodness, a weekly chart of NVIDIA, and look at this. This is one beast. I do not know how to actually cover this because it just keeps on breaking all our levels to the upside. So just an amazing thing, and I think the sky is the limit. Looks like now this thing is gunning for $1,000 per share level. This might looks like it's only $300, less than $300 away from that mark. That's the psychological level. What we can do is just to assess a few things. If we just take this high, and let me copy this, right, and take this low. Yeah, so we have the ABCD coming around roughly around $785 per share level, and of course with this kind of a move, wow, I mean, wow, looks like maybe $1,000 per share level might be the next stopping point for the stock. And kudos to all those investors who got into this stock and you're just enjoying their gains ever since this 78.6% BTC swing point took place. So that's amazing. Artificial intelligence related stocks are doing pretty well. That's good. With that, let's take a look at Symbiotic. So this is also an artificial intelligence related stock. However, this is more on the robotics side. So they are building artificial intelligence for robots, which could be used in a warehouse, for example, and doing few other tasks. I don't think they are at a point yet where we can actually go into Costco and buy a artificial intelligence backed robot which could come and do daily chores for us, like wash our clothes or wash our dishes and do that sort of stuff. But who knows, maybe 5 to 10 years down the line, we might actually be able to get some sort of a robot that might be capable of learning those kind of things to do for you. And what a nice thing it would be to have such a robot doing that kind of stuff. I worry if the robot, doesn't like you a lot for some reason and go a little bit mad, then they could do some damage as well if they are left alone. Okay, just my thoughts, just joking around there. So here, last week we had the earnings come out for this stock. There was a fair amount of volatility. We'll just have a quick look on the daily chart. And what we have also seen is that the buyers actually jumped in right from the bottom of this channel, and the stock, it's a bearish candle for sure on the weekly chart, but the buyers came in and bought quite a lot of it, which is good. And here we need further price action, whether it's able to break out of this flag formation. If it is able to break out of this flag formation, then normally what happens is that the price accelerates quite quickly, and in this case, if the breakout is the upside, then there's possibility of $70 per share level, and then of course the bigger ABCD around 85. I've not drawn the Fibonacci expansions. Let's try doing that. Here we go. Okay, let me actually, that's 1.618, 1.272. Let me remove these. Oops. And here we go. So yeah, the ABCD and 1.618 come at 85.50. I think that is fairly achievable if it is able to break out of this flag formation. Now let's have a look at the daily chart. Here we go. This is the daily chart. And here we go. We had the earnings come out. I don't know exactly what happened in terms of the earnings, and then what we see is a double bottom formation taking place on the daily chart, and then a bull bar which actually exceeded the highs of this. So that's a fairly good, pretty good sign. The following day, again a bull bar above the 20-day moving average, which is above the 200-day moving average. So from a momentum perspective, the price pretty quickly regain, and this is what we are looking at from the weekly chart. That's a channel formation. If it is able to break out of this $50 per share level to the upside, I think the ABCD patterns that we are looking at, they become they become more of a reality for this stock rather quickly, in my humble opinion. With that, and now let's take a look at Netflix. And this is the weekly chart of Netflix. This stock, the earnings came out, I believe, around here or maybe the week before. And what the stock is doing is right at the 78.6% Fibonacci retracement, just there, consolidating over the course of a couple of weeks, which is quite normal. Look at this massive amount of buying that came in. Now, I'm not overly bullish the stock at this stage, because it's really near the 78.6% Fibonacci retracement. The all-time highs have been around 15th November 2021. It's done a fair amount of recovery, but it's not like Meta, which has made new all-time highs. So maybe this move which is there. This is where some investors, maybe even longer term investors who got in around here, might decide to take some profits, and we can see a pullback, but not really overly bullish this stock, although the price action and momentum also looks good for this stock right at this moment. With that, let's take a look at Roblox. Here we go. Weekly chart of Roblox, and here, wow, so that's good for the price action for Roblox. I believe the earnings came out last week, and we have a bull bar closing right on top of the 38.2% Fibonacci retracement. So the thing is that it also covered pretty much this high as well and pulled back from there. So it really needs to get above this level. Let me try drawing it here like this. this to, there we go. So getting above $47 per share level, of course the next target will be about 53.80, and then I believe this 38.2% Fibonacci retracement around $67 per share level is achievable for this stock. Let's actually go down to the daily chart as well, and here we go. Yeah, so this is where the earnings came out, and the stock jumped quite a bit, and it's just it looks like there's some profit taking going on around here, but yeah, it's quite also expected because it just went so close to the top of the range. So if those people who still believe it's a trading range and they were buying around here, maybe some even lower, they might decide to take some profits around this level. And this is usually what happens when a stock or any asset, to be honest, is trying to, especially in stock indices and stocks, because the stock indices tend to be mean reverting assets. Whenever they try to break out of a trading range, normally the breakout fails. It doesn't go that far, and then there is a pullback back into the range, and it reverts back to either a mean or to a balancing level, which could also be an area where there has been a fair amount of interest, and then it begins to build the momentum again, and then if there's gonna be a bullish breakout and then a second attempt with a fair amount of force, it's able to actually make the actual breakout, which remains sustained. So I wouldn't be surprised if this stock pulls back a little bit more. But the good thing is this 38.2% Fibonacci retracement has held, and the momentum is also really improved because the 20-day moving average is above the 200-day moving average. So that's really good from the momentum perspective as well for this stock. With that, we will now take a look at zscaler. So this is the weekly chart of zscaler, and as we had mentioned, it was moving up towards $265 per share level, which could be a pretty strong resistance level, and could make this stock pull back into these averages right here, which are also creeping higher for zscaler. But good price action. Look at the kind of accumulation, this cup kind of formation, and in my opinion, some sort of a pullback which could actually form a handle for a cup and handle pattern formation wouldn't be a bad thing actually. If it could pull back a little bit lower into these moving averages, 20 and 200 week moving averages around here, which would be from a Fibonacci perspective. Let me actually draw the tool around here. I don't know where the actual I will be assuming it's there. That's an assumption. It could happen, but it's an assumption. Yeah, right into the 38.2% retracement. That would be a fairly bullish thing for the stocks to pull back by this much in a bull market. That's fairly normal, and in fact I would like to see this pulling back right in the structure as well, and the moving average is 38.2% Fibonacci retracement. And then if it is able to form that a little bit of a channel formation, a flag formation, and break out of it, that's gonna be our classic up and handle formation. So that's great. Yeah, one more thing I think we should also look at it like this is like a ladle pattern formation. So here we go. So what I've done is I've just connected these two major swing points around here, and that also comes around really that region that we just mentioned. So that's good for zscaler. I'm just trying to remember any other stock. Yeah, so Amazon. So Amazon weekly chart getting stronger, going for the top. Here we go, and this top could be a pretty important one, 188, because also the ABCD, and we have some structural resistance longer term coming around here. But looks like this is where it wants to go and target. With that, we'll also take a look at Shopify. Weekly chart of Shopify, finally a great looking candle on the weekly chart, breaking above the 38.2% Fibonacci retracement, breaking above the 200-week moving average. The next target 50% comes around $100, which is also at a kind of a psychological level. So looks like finally the stock is going for this ABCD formation. We mentioned around 95 to 100, $100 per share level. I think for this stock is achievable. We were bullish this stock, and we were targeting around the $81 per share level, and the price just hovered around for a number of weeks, almost a month. It did. If you take one week, 2 weeks, 3 weeks, 4 weeks, for 1 month it was just hovering around this, and then finally last week it just broke out. So that was our target. We achieved that target, so that's good. Now the next one is roughly, I would like to say, about $100 per share level is something which it looks like the price is eyeing for. So with that, thank you very much for watching the videos. Apologies, a little bit longer video, about 25-26 minutes, but we had a lot to cover because the weekend review, and I hope I was able to give you a good analysis, and we covered quite a lot of major stocks. And if you like the analysis that we do, technical analysis using Fibonacci expansions, projections, extensions, and pattern recognition, and then please do think about subscribing to the channel. And if you found this video of educational value to yourself, then please give it a thumbs up. And that personally just tells me that people actually get value out of my videos, and it encourages me to keep on producing more videos for you guys for educational purposes. Thank you very much for watching the video. Have a fantastic weekend. I'll speak to you guys soon. Good luck and good trading.